Good afternoon, traders. John Caruso coming to you here with your currency update for the day. First, we're going to take a look back on the U.S. dollar. The U.S. dollar currently trading roughly around that 101 area. Seems to be a pretty good support area, but it's found some very significant resistance up around 101.50 to 101.75. That does come in as the top end of the trading range. Really having a hard time finding some footing, some momentum to the upside. I think a lot of it has to do with the Federal Reserve. They're really not giving us much of any indication that a March rate hike is coming. They have seemingly left the door open for March to be a live meeting. However, I don't think the market is really believing that they will move in March. So I think that's one of the reasons why the dollar's kind of at a stalemate right at the present moment and having a hard time finding some upside momentum. Inversely to that, looking at the euro currency, we did hold 105 early on in the week. That is a key technical level, support level. The path of least resistance is still very much to the downside of the euro. Especially with German GDP year-over-year missing expectations, as well as German consumer confidence on Wednesday missing expectations as well. So it's going to take a lot to get the bulls back in charge with the euro. So at the present moment, the path of least resistance still remains to the downside. The next downside target would be down around 104. Looking at the British pound, I am starting to become more and more bullish on the British pound. We have been largely in a sideways trade since the beginning of the year. We are starting to find starting to see some momentum within the UK economy. However, one of the obviously Brexit still kind of hangs in the background right now, and that's part of the reason why the bulls have been having a hard time gaining some significant momentum in to the upside. However, we did see on Wednesday us take out last week's high, which I believe is a key technical indicator, which means that the trend could be shifting back to the upside. But we need to see more evidence of that. Next week, we do have a pretty front-loaded week as far as U.S. data is concerned. We do get durable goods on Monday and then followed up by GDP on Tuesday. So I think the market will have a better feeling as to whether or not the Feds are going to signal towards a March quarter point interest rate hike or not. So I think you're going to know more of the story obviously next week as the data continues to roll in. What we're trying to pinpoint here is what part of the economic cycle that we're in. We are starting to see growth accelerate here in the United States. It's been accelerating since the end of last year, and we've also seen inflation pick up as well. So back to the U.S. dollar, we still believe from a longer term standpoint, the path of least resistance is still very much to the upside in the dollar. However, we might see some more attractive levels coming down the pipe here. So we'll keep you informed the best that we can. Feel free to reach out to me at the trade desk if you'd like to touch on any of the other foreign currencies. Thank you.